South Africa's biggest mobile phone operator, Vodacom, reported a 38% rise. That's in first half headline earnings per share to 303 cents. Due to the removal of one-time charges, group revenue increased 5.1% to 29.5 billion rand. Joining me in studio to look into the numbers, David Lerche, telecoms analyst at Avior Research, and our market watcher today, Kevin Algeo from Imara SP Reid. Gentlemen, thank you very much for your time. Well, David, what do you make of the numbers?
Nice positive set of results. Very good considering the fact that the South African market, people have been saying for some time now that the voice market is saturated. Vodacom showed nice sort of 3.5% to 4% growth in voice revenue, and then 39% growth in data revenue in South Africa, call it just over 40% for the group in data revenue. And that's really kind of where the future is, what Vodacom is investing very heavily in. And
can the growth momentum continue from these levels? Today closing up, just to give you an indication, 68 Rand 49, Vodacom closing today up 1%, outperforming the broader JSE all share.
The growth in voice is going to be very, very difficult to be maintained. We've seen a sort of average realized price per minute come under a bit of pressure, down about 16% year on year. But more than that, we've recently, subsequent to these results, had the launch of Aita, Telkom's mobile brand, and they're obviously putting some pricing pressure in the market and will look to take some subscribers away. Plus you see Cell C recently having sold their towers. I think the deal was sort of announced this morning, that that's also going to sort of foster more competition in the game together with lower interconnect. So all of that points to trouble on the voice revenue side, which is of course their core business. But right now, certainly the data is more than exceeding the trouble there.
Can it continue to more than exceed the trouble, in your opinion? What did we see? Data up 41%, 40%?
Yeah, call it around about 40% year on year. We probably won't see it quite that high going forward. Will it be able to counteract the decline in voice? Probably yes. For the next 6 to 12 months, probably no subsequent to that.
Kevin, let's bring you in here and your thoughts on these telecommunications operators. Obviously, we've been debating furiously up to this point that there could be X growth at this stage, as is indicated potentially by the voice arena, although they have done well on this interim period.
Yeah, we think it was a good set of results, and management did well to deliver that. Obviously, it's also post the World Cup, and they had quite a smooth process during the World Cup as well. And the two key takeaways for us is just the increase in the dividend, which we'd expect going forward, and then the increase in the data. I think Vodacom will be positioning itself along with its international peers in the future, which is on a PE of 10 to 12 and a dividend yield of 5 to 6%. Whether it's a growth stock or not, I think it's past its growth phase, and it will more position itself as a good utility with a high-paying dividend.
Is that a fair comment, that Vodacom is now a utility?
Not quite yet, but soon enough, yes. In due course, it's a utility, and investors will really be focusing on the dividend.
Gateway and Verizon Business, what traction are we seeing in that arena?
Gateway, we didn't hear very much about it today. That business is doing better than the plan. Sort of this time last year, they wrote off a large amount of...
And that was almost kind of the Achilles heel of the group. What are we going to do with Gateway? Do you think that the situation has stabilized at Gateway?
They actually are ahead of the plan that forced them to write so much of the purchase price off. But of course, strong rand and Gateway earns its revenues in dollars does hurt them quite a lot.
What about this element that the fibre infrastructure deployment in the rest of Africa is what is needed for Vodacom to gain traction in the rest of Africa, and Gateway has the satellite technology?
Certainly, as fibre comes through more and more, it does work against Gateway's business model, but Gateway is getting a lot more involved in services and looking to do the same kind of thing that Vodacom Business does here, some ISP stuff, some consulting things like that. But yes, the satellite business is probably, it's going to remain as a redundancy thing rather than the primary method of transferring calls around networks. Is
that a problem for the group going forward? Surely that's
a worry,
a red flag almost.
Yeah, but they wrote the 3 billion rand off last year. The acquisition price was too high. That's gone. The money.
So better times for Gateway ahead. They can gain traction, in your opinion?
Some traction, yes, but you know, it remains a very small part of the group. I don't think it's something we should be too concerned about either way.
Looking at now the RICA situation, we have seen that deadline extended, and your thoughts as an analyst in this arena, your thoughts of the impact of RICA on the general telecommunications space?
Well, it certainly hurt the operators in the subscriber numbers that they reported, particularly sort of in the quarter to December last year. Really, their subscriber numbers looked very poor then, but the revenue had very little effect. So essentially what the operators did, they just disconnected a lot of subscribers who weren't actually using their telephones anyway. They were maybe receiving one voicemail a month that they were never retrieving, things like that. So it's got rid of a lot of the rubbish out of the subscriber numbers. So, and that's also why we've seen ARPUs tick up. It's not so much a case of people spending more, it's just the base by which you're dividing by is lower.
The investment case, now as Kevin has pointed out, we're looking at Vodacom potentially moving to a utility down the line. The investment case right now from a valuation perspective, as I said, closing at 68 Rand 49 right now. You've got the alternative in MTN. I don't know if you're going the Telkom route versus ATA.
On the investment case, we believe MTN offers a better investment case. It's trading at not enough of a PE premium to Vodacom, given their different growth paths. We think MTN, you could see the dividend lift up from, call it R3.50 or R4 at the end of this year to sort of over 10 Rand by 2014 or 2015. Vodacom, on the other hand, we see dividend maybe pushing up to just over 5 Rand in the year to March 2012, and then staying stable between 5 and 6 Rand subsequently. So we like the MTN growth story better. Telkom, it's always very difficult climbing into bed with government. Their priorities are not just as shareholders but also as stakeholders. And we need to wait for the A and B shares to convert to ordinary shares in March next year before we're really going to see much of a change in the very top of that business. And unfortunately, that's what needs to happen before Telkom can re-rate.
If anything stood out as a red flag for you on Vodacom, what would it be at this interim period?
Probably the fact that we are seeing pricing pressure. So what is particularly on the data. So data revenues up 40%, but data volumes up 60%. And what that means is they keep having to invest more and more and more money in network capacity to generate that one additional Rand of revenue. And that concerns us.
They have said capex will be down by 6.8 billion.
No, it's going to be at 6.8 billion for the full year, which is roughly in line with kind of where it's been in the past few years.
So not a dramatic reduction on the capex front?
Dramatic reduction in this half because they stopped building during the World Cup. They wanted to make sure the network worked perfectly. And I think the operators, all of them, did very nicely around the World Cup. And so, yeah, we had just over 2 billion Rand of capex in H1. We get another 4.8 billion or so in H2. And remember, Vodacom's also benefited from the strong Rand in buying their capex. Probably half of it is dollar denominated. So that helps them too.
David, thank you very much for joining us. David Lerche, telecoms analyst at Avior Research. Coming back to the broader market today, we've had a lot of news flow. What particularly has stood out for you? We've got Raubex later. We'll be talking to Francois Dietrichson, who's the financial director, drilling down into those interim results where we've got slight pressure on the company as a result of the competitive environment.
Yeah, Raubex, we were encouraged with the results actually. It was just at the bottom end of their trading update, but I think their trading update was a surprise to the market a few weeks ago, and the stock has rallied from 23 Rand up to just below 26 here. It'll be good to chat to the FD a little later.
But you like Raubex. Are you guys invested in Raubex? We
do have some Raubex. At the moment, we have a hold recommendation on it. We are overweight the construction sector as a whole, and Raubex is one of the ones that we do like.
And then Sappi, what are your thoughts on the paper makers before we drill down into Sappi in particular, because we have seen the company now back in profit territory, although the management team not happy with the results, the return on capital at this stage, striving for better things?
I think it does very good result from Sappi today, and you can see it in the share price. It was up 4 to 5%, and definitely a good turnaround from the third quarter last year, going from minus 20 US cents to 16 cents for the quarter here. As a sector, we're not very optimistic about the paper sector, and so we're encouraged with this result in the short term, but we take a harder look going forward.
If you look at Mondi versus Sappi, do you have any preference? When you say you're going to take a harder look at the sector going forward, those two stocks are obviously going to come up against one another. Is there a preferred entry point if you do decide to jump into the paper sector?
We do prefer Mondi. Mondi is not only a paper company but a packaging company as well, and so it can add value there. However, we think the paper sector as a whole is a sector with a lot of headwinds following it. There's a soft demand, although the demand has started to pick up, and it's a sector with a lot of capacity which is able to pick up as demand comes through. So if we're looking, for whatever reasons we want to invest in a paper stock, we think there's other commodity stocks which perhaps will perform better.
Lewis, first half headline earnings per share increasing 14.5% to 332.5 cents. This is in the furniture retailer space. It's not a bad result, and it looks as though the consumer is starting to come back to the fore in the furniture environment.
Yes, that was a steady set of results in what's been a very tough 2 years for that sector of the retail market. Lewis, in contrast to JD Group, we thought had a fairly good crisis and fairly good recession as it's come through. The lower interest rate environment is also starting to come through in the numbers there, and credit creation is the credit part of the sales are starting to pick up. So a good result from a good company.
And then Tongaat Hewlett saying that it's expecting first half headline earnings per share to increase by 10% to 482 cents. And it says it's starting to benefit from the targeted sugar production in Mozambique and Zimbabwe. A positive news story out of Zimbabwe.
Yes, it is, and I think we'll see a lot of South African companies in the next few years starting to benefit from their operations there. And Tongaat is one of those that has that operation going. I thought the trading statement, as they guided, was a statement of two halves. One is that the Mozambique and Zimbabwe operations are starting to come through, which is encouraging. The other thing is that the strong rand is really a headwind to their results.
So again, a story where we need a weaker rand for the company to show better results. Is that what you're saying?
Well, that company in that sector would definitely benefit from a weaker rand.